Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond at the Contrarian Trader, and let's begin with a bit of housekeeping. There will be no stock charts today, which I normally post on YouTube and the blog. This week, I will be in New Orleans. If you're in New Orleans and you want to say hello, please let me know. Drop me a line, either on social media or just ring me up on my phone, and we'll see if we can hook up for a cocktail. Members, we'll stay on our regular schedule, and if there's any change whatsoever to that schedule, I will communicate the same to you. Now, last week on Best Stock Charts, I mentioned that we created the commitment channel. And the purpose of the commitment channel is to document where, and this goes for members in particular, including myself, documenting our positions and where we plan on exiting our trades if we are wrong. And other members are to hold us accountable. In short, we are being held accountable for our stop-loss orders. Nobody else is doing that. And if you believe the old adage, as I do, a penny saved is a penny earned, well then, it's a very, very profitable behavior to get into by entering your symbols. Now, I'm going to show you the vote, and the winner is Honor Thy Stop. We had Obey Thy Stop, Stop-Loss Vows, SL Pledges, Stop Loss Proclamation, and Honor Thy Stop. And I believe I was Stop Loss Proclamation. So there it is. And we have a couple of great suggestions that I got a kick out of. I need to give a shout out to Craig E. Stop Baby Stop. Outstanding name. Ronald W. Stops today, profits tomorrow. Outstanding suggestion. David B., Stop Loss Now. And Ed B., I voted twice for Honor Thy Stop. All right, all good stuff. Thanks for participating, folks. And here it is. The previously aforementioned commitment channel is now Honor Thy Stop channel. This is where we plan on posting our positions and our stop points, and our members will hold us accountable so that we can live to play another day. Let's get to the charts. Let's kick things off with my opinion with regards to the market last weekend as we proceeded into the new trading week. So here was that rally back that I mentioned, because we were down in the pre-market. I mentioned that we would get a rally, lighten up, sell till you could sleep. There was your opportunity. Once we broke down below this lower band of support, you knew it was all over, especially when we broke down to new daily lows. Now, do I believe that we're going to get a rally back this coming week? Absolutely. Do I believe it will fail? Absolutely. So as I mentioned, I expected that they would rally the market, and they did rally the market. This is a weekly chart, but I did mention that they would fail. They would fail to break it out, and we closed well off the highs of the week. So what we're going to do is tomorrow, I'm going to go over with members the weekly charts of the entire market as we do each week. We're going to formulate our strategy of how we plan on trading the markets this coming week on the week ahead commentary. So if you're not currently a member, please sign up. You'll get that commentary on Sunday. Now let's get to the charts that we're looking to trade this coming week. EDC. This is the Direction Emerging Markets Bull ETF. We were actually stopped out of this trade on weakness a while ago, and we finally got a reversal bar off of this lower band of support. Now, we didn't put in a new weekly low last week, so we appear to be consolidating. And if you're a believer, as I am, that the dollar will continue to weaken, well, then the emerging markets is where you want to be. Is it time to go running in right now and buying the emerging markets? No, not yet. I am not convinced that we are done, at least at a bare minimum, consolidating. And at worst, of course, we're not done with the breakdown. Take note of the Stokes. They're putting in lower highs and lower lows. And we have both lines on Stokes trading down below 50. That's not good. Volume to the upside last week was very light. So while we recaptured daily support on Thursday, it wasn't enough for us to get long once again. We need a little bit more conviction on the part of traders, and we'll look to open up a long position when we get that signal by the market. Next chart up, BRZU. Last week, we flashed a bullish key reversal on the week. Now, there's a lot of political events unfolding down in Brazil. Now, what I really like about last week is that the prior week, we reversed and flashed a bearish key reversal. We closed down below key support. Last week, we made a new weekly low, which is technically very bearish stuff. However, we managed to rally and close at the highs of the week, and we recaptured prior support. So a very bullish week last week for the BRZU. So members, more to come on Sunday on the week ahead commentary, where we do a deep dive on all of these charts. Cal-Maine Foods. Now, we booked profits early last week on Cal-Maine Foods. We bought it on this breakout here, and we enjoyed a nice rally higher. Now we have broken down, and broken down hard on volume, no less. So we have institutional distribution. This is a traditionally thinly traded stock. I would not be a buyer right now. Let's take a look at a weekly chart. We have a bearish key reversal on the week, a lower high, and if we break down below 39.50 on Cal-Maine Foods and we close there, it's all over for a very long time. That would be a very, very serious technical breakdown. Personally, though, I don't think that's going to happen. I think that we'll probably get another couple of weeks of downside price action. We'll look for stability, and I will look to be buying Cal-Maine Foods yet again. It's a great trading stock. I've traded it many times, and I believe that the ag names are going to bounce back in the coming weeks. So members, more to come on Cal-Maine Foods. And in fact, I posted on the, I still have this, the prior commitment channel, now the Honor Thy Stop channel, where we commit to stopping out at a certain price. I committed to stopping out on a new daily low below 44.30 on no closing basis, meaning I wasn't going to wait to see if we closed the next trading day down below 44.30. What I meant was that if we traded down below 44.30 down to 44.29, I don't care what time of the day it was, we were stopping out. And that's exactly what we did. And now when you take a look at the chart, we stopped out on the 27th, and we came nowhere near on that day to the stop I pointed out on the Honor Thy Stop channel. But we knew that this bearish reversal day, we put it in a new high on the 27th, and we reversed. And the probability of a continued downside move was very likely, especially given the market strength or the lack thereof. So we stopped out preemptively. So there's value in committing to writing down your stops and making them public, because the probability of you sticking to them grows dramatically, especially when you have support. Let's move on. The next symbol we're looking to trade is one where we just booked profits on, which is TCP Pipeline Partners. We were building a position here on a bullish key reversal. The shares rallied, and we booked profits. Now, why did I book profits so soon? Well, I didn't enter the position at a entry point that I found most desirable. There are two other support levels below last week's lows that I find far more desirable to build an aggressive long position at. I'm going to talk about those support levels with members tomorrow. We've already discussed them, but for new members, we will go over those support levels to bring them up to speed on our strategy with TCP. Now, we booked profits here on the 27th, very close to the highs of the day. And you can see that, thank God that we did, because we closed down on the day. And the next several days, you saw topping tails. What does that mean? It's bearish stuff. And you may be saying, Bob, I don't know what you're talking about. The next couple of days, you look like the fool because they were up. Folks, one thing that I've learned over the course of many years of doing this is that all up days are not alike. To me, when I look at these candlesticks, the 28th and 29th, they are harbingers of bad news. Why? Let's update the chart. All right, let's begin with acknowledging RSI, which is still down below 20, making it attractive. Stokes, I believe they're rolling over. Price action validates my opinion about Stokes, or vice versa. Now, getting back to the candlesticks, you could see that every time we rallied up to at or near 35.76, sellers moved in and took the shares off the highs of the day. Would you want to be a buyer at 35.76. No, I wouldn't want to be, because the market is sending you signals. It's telling you that there are sellers here and from in the past at this price level that all they want to do is get their money back. They are going to sell, and there aren't enough buyers to overwhelm those sellers. So we go back to the laws of supply and demand. If we have too many sellers up here, well, then we need to pull back to a lower price point to where there are more buyers than sellers willing to commit to TCP. Now, if we break down below 33.38, we have a couple of points of downward move here, I believe, before we bottom out. And I hope we do get that break, because I really would like to get long of TCP partners. So members, more to come here. Valero, I went over this chart a couple of weeks ago. What's important to acknowledge is that while we have a fairly firm chart here, meaning we're consolidating, we did break down the week of March the 19th below the lower band of support. Last week, we rallied back. The question is are we retesting a breakout point, and might we roll over here, or will we break out? So we don't know yet, right? That's the honest answer that we need to put forth, because we don't know. Now, I'm going to go over the daily chart in greater detail with members on Sunday, and perhaps we'll have more visibility on which way the stock is going to go. But based simply on the weekly chart, we have to go with what is a known. And what is that known? The known is that we have broken down below the lower band of support. Now, why am I even talking about it? It's because I still think that Valero, the setup here, the bull run is firmly intact, and that there's a good chance that we break out. So it's worth it to me to keep an eye on this position despite the weekly breakdown, because despite the fact that we are contrarians, we respect the overall trend, which happens to be up. I like the Stokes here, possible double bottom setup. Now, if we break down to a new weekly low on Valero, that's a problem. RSI hooked up last week. No new weekly low last week. Good stuff. Volume was light. That's not good. So members, more to come here. Sonesta Technologies, we spoke about this one a couple of weeks ago. It broke down. It broke down with the market. Now we're ready to talk about it once again. Why? It's because after we broke down the week prior to last, below this lower band of support, last week we reversed to close higher. Did we break out? No, we did not. So we're close to pulling the trigger on Sonesta Technologies. Not quite yet. It still needs to prove itself. We did break out on Ultimate Oscillator. Volume was a bit light. Stokes is still declining, so the shares are suspect, because we know that when you have both lines on Stokes trading down below 50, rallies tend to fade. I repeat myself ad nauseum about that fact, but it's worth it so nobody loses money. Respect your Stokes when they are trading down below 50. MDU, another one where I spoke about it a couple of weeks ago. We're very bullish on it. Last week, we broke out of this bull flag formation. This is a beautiful cup handle formation. We're not quite at the pivot point yet, but we're very close. And we're very close to pulling the trigger on MDU Resources. Weekly chart, RSI. We have a breakout on RSI, breakout on Stokes. All good stuff. Members, we're going to talk more about the daily chart and timing our buy on MDU on Sunday on the week ahead commentary. Another one which I spoke about a couple of weeks ago, Las Vegas Sands, LVS the symbol. The next chart up, Domino's Pizza. I've been watching the stock for weeks. Members are probably getting sick of me talking about it, but we haven't been able to buy it yet, especially in this market environment. But given that market environment, and when you weigh how Domino's Pizza has been behaving relative to the S&P 500, it's really doing well, although it hasn't broken out yet. It's holding up very well. Now, if and when this market does rally, you should expect to see new leadership, because it's certainly not going to be the FANG names. They're broken. So Domino's is holding a tight trading range in a very rough market, a very volatile market. Volume was light last week, but you expect that when you're in a trading range. We did not break out, obviously, and we did close down off the lows of the week. So we're going to talk more about this tomorrow on the week ahead commentary. I like the fact RSI is still rising, Stokes is still rising. So again, we're going to talk more on Sunday with regards to when we want to get involved with Domino's Pizza. The next chart up, Kirby Corp. We continue to trade within a sideways consolidation, a very nice consolidation, very similar to Domino's Pizza, DPZ, which I just went over. The market has been very volatile and weak, while KEX has been relatively stable, unaffected by the overall market conditions. What does that imply? It implies that in all probability, when the market stabilizes and begins to catch a bid, KEX is going to rally. Now, we're very close to a breakout point. We're not there yet. Volume was light last week, but again, as with DPZ, you expect to see light volume when you're in a consolidation. Stokes is setting up for a possible double bottom setup, which is very bullish. Higher lows on RSI, all good stuff here. So KEX, we're going to talk about tomorrow on the week ahead commentary in greater detail. And that's it for this week, folks. We have a lot of stuff going on at the Contrarian Trader. If you're not currently a member, please join. Next week, again, I will not be doing stock charts this morning. I will be in contact with our YouTube viewers throughout the week from time to time. But given my travel schedule, it's going to be a bit hectic. Members will be in contact as usual. Let's get the symbols posted to Honor Thy Stop channel. Everybody have a wonderful Passover and a happy Easter. Enjoy the time with your families and have a profitable trading week next week. Be well.